Welcome everyone, and thanks for joining us today. For those who haven't watched any webinars of ours in the past, my name's Aaron Glossop, and I am happily joined today by our Operations Manager, Mandy Megan. She generally takes control of answering all your questions on the chat throughout the session. And then when we have a bit of time at the end of our slides, we'll do a little bit of Q&A back and forth. So if you've got any questions as we go through the slides, just chuck them in the chat, and Mandy will be just monitoring that and trying to answer as many of them as you can. Firstly, I just want to begin by acknowledging the traditional owners of the land on which we meet today. Today I'm on Kaurna land, and I pay my respects to the Kaurna people and also pay my respects to elders past, present and emerging. And I extend that respect to all Aboriginal and Torres Strait Islander people with us today. The purpose of today's session is essentially to walk you through the current process for making a claim and applying for leave. The worker portal will handle this automatically in the future, but during this transition period, there's a simple manual step. I don't think we'll use up the entire hour today. You'll likely get some time back in your calendars once we cover off these key steps. And hopefully by the end of this session, you'll know what you'll need to do, what employers need to do, and how the scheme processes the request. I'm just going to start by reminding everyone around some of our key dates. As most of you should be aware, the scheme started on the 1st of October. So by now, most of you should have registered your organisations. If that's still on your to-do list, can I ask you to prioritise that as soon as you can? It's a quick 5-minute task through the employer portal on our website. And as you know, we're now in the first reporting quarter, which runs from the 1st of October through to the 31st of December. And during this time, you'll need to register your eligible workers. Aim to have that wrapped up by the end of December, so you're ready for your first return. And then that key date of the 21st of January is when your first quarterly return is due and the levy payment is due. So you can submit your return earlier than that, and you can pay your levy earlier than that, but they are the due dates. Once you're set up and you're registered and your eligible workers are uploaded, your main ongoing task is to complete a quarterly return. The dates are on your screen now for the return periods and the due date for each of those periods. It's pretty straightforward. We'll upload a return form on the employer portal for you. And once that's uploaded, you'll be able to complete that and submit your return. Just a reminder that invoices for the levies are generated on submission of the return and are due on the same date as the return lodgement. So how does the scheme operate at a practical level? I guess in 4 simple dot points. The employers register, they add their workers and report service for each quarter along with the levy. That information goes straight into the scheme's records. And the scheme keeps a consolidated record of service worked in the sector. This includes service with a current employer, any future employers, as long as the roles fall under the scheme. When a worker meets the service requirement and submits a leave application, the scheme will process the claim. And once the employer approves the timing, the scheme makes the payment directly to the worker. This is what allows long service leave entitlements to move with workers across the sector. Importantly, we've talked a fair bit in the past about pre-scheme service, and this refers to the time that a worker has worked in the sector before the 1st of October 2025, and it's continuous service that we want to know. So the employer that you're working with. Employers will report the service and leave accrued before the scheme began, and that information is added to each worker's record once it's provided. We're going to ask for that information from the employers early next year. We didn't want to overload employers with numerous requests for information. We wanted you to register your workers and get all that stuff right before we ask you to do too much more and put you under too much pressure. So come early next year, we will let you know when we require you to provide that information to us. It's likely to be in February, I expect, but we'll have an exact date for you fairly soon. The scheme will maintain the full service history, covering both pre-scheme and post-scheme periods, and records will continue to build as employers submit their pre-scheme data and data around a portable scheme as well. And then when a worker becomes eligible and submits a leave application, the scheme will process the claim. Just want to work quickly through what the claims form looks like on the website. So as I said earlier, we have a form that's downloadable on our website. If you go to the resources tab, the drop-down box, there's a form downloads link, and if you click on that, this form will come out and it looks a little bit like this, if you can see that. It's a 3-pager, some instructions on the front, and then a section for the worker to complete and a section for the employer to complete. So the first step essentially is for the form to be downloaded and the workers take responsibility of completing the first step once they're ready to submit a claim. This form must be filled out by the worker and then will be passed on to the employer for their approval. The worker will fill in their details, first and last name, as you can see here, and then their date of birth and their email address and phone number and their address details. All the boxes with red asterisks, we can't say that word, asterisks, are mandatory fields that need an entry. Following on from that, the worker will choose the appropriate claim type. And as you can see on this screen here, you'll have 3 different claims. You have long service leave, you have a cash out claim, and you have a termination payment. With the long service leave, this is where a worker is claiming leave after accruing 120 months of service. Unless, of course, the worker is covered by an enterprise agreement that allows them to claim that earlier. The leave must be applied for in full days and a minimum of 7 days. This is to be used where the worker intends to take leave from work, take some time off. It's really important to understand a few things with this claim type. We need to know the date of your first day of leave. As you can see, first day of leave, fairly self-explanatory, and how many calendar days it is until you return to work. For those, I guess, that aren't fully across how long service leave is administered, all long service leave is paid based on calendar days, not the number of days someone normally works. The payment will cover every day in that leave period, whether it's weekdays, weekends, and public holidays. I guess as an example, if someone is part-time and works 4 days per week and applies to take 2 weeks of long service leave, that is considered 14 calendar days. So 2 times 7-day weeks. And ordinary weekly pay is averaged over the full 7 days, even if that person works part-time. And in this case, obviously, like I said earlier, 4 days a week. The time they take is counted in full calendar weeks, not work shifts. It doesn't stop and start around rostered work days. If we just move on to the next claim type, the cash out, a worker can claim only after accruing 120 months of service unless again, the worker is covered by an enterprise agreement that allows them to claim earlier. That's the key thing. It has to be an enterprise agreement and it has to state the reasons, or sorry, not the reasons, but it has to state that this is allowable under this agreement. Unfortunately, a policy, an internal policy is not efficient, is not sufficient. The Act does not allow us to accept an internal policy as an equivalent to enterprise agreement. The amount of long service leave to be cashed out must be claimed in full days with a minimum of 7 days. And this, again, is to be used when a worker wishes to receive a cash payment in lieu of leave. The last one on that list is termination payment. And this is where a worker would claim only when employment ends by the worker or the employer, and the worker has accrued at least 84 months of service. By making this claim, the worker confirms that they do not intend to return to employment in the community services sector within the next 12 months. So you'll see that you've got a cessation date, so the last date of employment by the worker, the termination reason. There is a couple of drop-down selections in that space, and then if that's not available or if one's not available that you need, you have the other box there to complete. This next step or next part of the document is where the worker tells us where they want the payment to go to. Again, the red asterisks are mandatory fields that we require. The worker will complete the details of the financial institution, their BSB and account number, where they want the payment to go to. It can be, sorry, I'll start that again. It has to be in the worker's name for this payment to take place, but it can be in a joint account. So it can be you and your partner or whatever, but it must be in the name of the worker. The worker can provide us with their tax file number and their tax residency status at this point. This information ensures that the correct amount of tax is applied, and if the worker opts not to provide their tax file number in this space, the tax will be withheld at the maximum rate, just like any other occasion that you would share your tax file number with. For information on taxation, we would recommend you refer to the ATO website and or any individual that you would normally talk to about taxation. The next section is the employer details. Workers are to enter the employer details, including the employer reference number. This is available on the SA or the Portable Long Service Leave website, but for now, this can be provided by the employer or by members of the SA Portable Long Service Leave team on request. I should have said that it is currently not available on our website, but will be soon. The worker at this point in time also indicates whether or not there is a salary sacrifice arrangement in place. They would select, obviously, yes, if there is one in place, and if they want that amount paid to their employer, they would also select yes at this point. If there's any, I guess, misunderstanding or concerns around understanding this part of it, the worker is you're more than happy to talk to your employer about it, but also if you wanted to call us, we would also talk to you a little bit more about that as well. And the next part of the worker step is the worker declaration. So it's a pretty simple confirmation. It states that the information, I guess, is provided in the claim is accurate and complete, and that the worker consents to SA Portable Long Service Leave using that information to process the claim. The next step is where the employer starts to complete their section. You'll see here, this is on the third page of that form I showed you a little bit earlier. This is where the employer provides us with the worker claim information. The first there you'll see is the weekly pay, which is in the gross amount. The employer is to calculate the worker's average weekly hours over the past 3 years and multiply by current ordinary hourly pay in accordance with calculating the ordinary weekly rate of pay under the Long Service Leave Act 1987. For the worker service, the employer is to record continuous service in months from start date to the date the worker was registered with the scheme. This should include partial years and can be calculated up to 5 decimal places. Long service leave accrued, it is where the employer calculates the weeks of long service leave accrued under the Long Service Leave Act before registration with the Portable Long Service Leave Scheme. Long service leave should be accrued at a maximum rate of 1.3 weeks of leave per year of service completed. This next bit is where long service leave has already been taken and where the employer is this is where the employer records the weeks of long service leave already taken before registration with the scheme. And the next section is the calculation of the balance of weeks of long service leave available. This should be equal to weeks of leave accrued minus weeks of leave taken. The employer liability at the time of claim. This is where the employer calculates the amount that would be payable to the worker for long service leave on the day before the registration with the scheme. In most cases, this will be the 30th of September 2025. The next step is specifically focused on the salary sacrifice process, and the employer here would provide the details of any arrangement in place, including the amount and how often it's applied. So we would, as said earlier, we would provide the salary sacrifice portion back to the employer. So we need the employer's BSB and their account number and their account details to be able to action that. The next and last step is a comment section, which is available, I guess, to note any extra information that isn't covered elsewhere in the form. Feel free to put some extra details in there if you feel it's necessary. For the employer approval, the authorizer must be an authorized contact in the employer portal and must approve the form before it's sent to the Portable Long Service Leave team for processing. That's a really important one to remember. If you are a contact point for the organisation, for the employer in the employer portal, you can undertake this, but you must be, or sorry, if you aren't, you won't be able to do so. This completed form can be lodged by email to claims@saplsl-community.org.au. That website is also on the form, just in case you, if I spoke too quickly, but it's also on the form and you can email that through. I feel like I've talked a little bit about salary sacrifice already, and if there's any confusion, feel free to reach out to us. But just to make you all aware that the Act, the Portable Long Service Leave Act, includes special rules that salary sacrifice arrangements won't prevent you from receiving your long service leave payment correctly. So if you already have a salary sacrifice arrangement in place with your employer, the scheme will send the salary sacrifice portion of your payment to your employer so they can provide directly to the salary sacrifice provider as they would normally do. Just going to get into a couple of Q&As. Some of the things that we've been asked fairly regularly over the past few weeks. And I'll just go through a few of these slides. Some of them seem pretty simple, but just important that we go over them. So the first one is, can I take a single day of long service leave? And the answer is no. The minimum period you can claim is 1 week, which is 7 days. And this applies to all workers covered by the scheme. Remember what I said earlier about how long service leave is paid based on calendar days? It's really important to get that right. If we've got any thoughts that maybe there's a little bit of confusion, we'll have a chat to you about what that looks like and what that might mean to you when we're actioning the form. The next question is whether or not you can take your long service leave after 7 years. And the short answer is Yes, but only in specific situations. You can claim leave before 10 years if you're covered by an enterprise agreement that allows for earlier access to long service leave. If your agreement doesn't include that provision, then the standard 10-year point applies. Another common question we get is what happens if someone leaves their employer before reaching 7 years of service? So only the service you build in the community services sector after the 1st of October 2025 is portable. That part will follow you across eligible employers no matter where you're working. Any service that you've built before the 1st of October only stays with you if you reach 7 years of continuous service with that employer. And I guess that can happen before or after the worker has, or they have been registered with the scheme. If you leave earlier, if a worker leaves earlier than that, the pre-scheme service doesn't carry over. So it's important to know that that continuous service over that date has to, I guess it's similar to normal long service leave, is in that you still need to reach a 7-year entitlement to be able to, I guess, accrue that long service leave entitlement. When it comes to approving your long service leave, the process involves both the worker and the employer. The worker will submit the claim through the SA Portable Long Service Leave scheme, and we will process it. However, the employer must and will approve the request. Only once the employer has approved it can we make any payment to the worker. We would expect, and I guess hope, that any worker wanting to take long service leave would have already had a discussion with their manager or their HR of their organisation. So it shouldn't come as any surprise. However, circumstances can happen where a worker might submit a request for leave and we send it to the employer for approval, and there's no knowledge of the request previously, so that's why we need the employer to approve it. Some of you may be wondering how far in advance you need to book your long service leave. The Portable Long Service Leave Act says you should submit your application at least 2 months in advance before you plan to take leave. Having said that, a shorter period can be agreed upon if both the worker and the employer are happy to do so. We also recommend allowing around 3 weeks for any request for payment or for leave to be processed by the scheme. Another common question we get is whether workers can ask us to deduct extra tax from their portable long service leave payments. And this may be things like HECS or salary packaging or anything in that space. And at this stage, there are no provisions that the scheme has to allow that additional tax to be deducted. Salary packaging affects, obviously, some earnings we report because the worker's payment is reduced by their approved salary packaging amount. However, we don't report the salary packaging component itself. That amount is paid back to the employer, as I said a bit earlier, who then sends it to the salary packaging provider. Because the employer is the one arranging and providing the benefit, they are responsible for reporting any salary packaging or fringe benefit amounts to the ATO. The ATO requires the entity providing the benefit, not a third-party player like SAPLSL, SA Portable Long Service Leave, to report those figures. When a worker claims portable long service leave, SA Portable Long Service Leave becomes the payer. That means deduction notices sent to the employer don't automatically transfer over to us. We can only apply deductions if we receive a formal notice addressed directly to SA Portable Long Service Leave from places like Services Australia, Centrelink, child support, the courts, or any other authorised government body. If the worker or employer knows there are active orders, they can contact the relevant agency and let them know the payment will come from the Portable Long Service Leave scheme. The agency can then issue a new notice to us so we can apply the required deduction. I just wanted to go over a couple of those really important questions. I'm sure there are many, many others, and I'm sure Mandy's busily answering questions on the chat right now. I know we'll have some questions afterwards, but I just wanted to reiterate our stance on compliance. Our approach to compliance is pretty simple. We are really focused on support and guidance, and our job essentially is to help everyone understand obligations under the scheme and to make it as easy as possible for everyone to meet them. If anything goes wrong, I guess our intent and what we want is to work with you to sort it out. We don't want to jump straight into fines or penalties. The Act does include penalties, but our role is to help you avoid ever getting to that point. Good records and clear documentation make the whole process smoother for everyone, and they give us the best chance of resolving issues quickly and collaboratively. I think I've said that quite a few times, that if you are making decisions or determinations about anything in particular, keep good notes, keep good records. So if there is any time that we need to come back to you and talk to you about that, you can refer back to them, and they're very important and very helpful. We know this can feel like a lot, so we do have quite a number of resources available for you to help you through the process. There are toolkits and guides on our website. They'll walk you through the registration process, the worker setup, the returns process, and the levy payments. We also have webinars like this that we've run in the past that we currently are providing, as well as future webinars. They will all be recorded and they'll all be uploaded to our website as soon as possible. I guess for some really quick answers on any of your questions, check the FAQs tab on our website. That's a very big growing list of FAQs. And if you need a little bit more help, our customer service officers are only a phone call away, or you can email them if you would prefer. Our officers here in our office are available, and they can guide you through any part of that process or answer specific questions. I guess the key message I want to make sure you take away from that is that you're not on your own. There are multiple ways to get some support whenever you need it. Thanks again. Just that was really important to get through some of those slides whilst we are in this manual process of the claims. To stay up to date, you can take a quick screenshot of that QR code on your screen now, which will take you to our website. Our website link is there. You can use the email address to send some questions or any inquiries to our staff. You can call either of those numbers, and that'll get straight to our customer service staff here in our office, well, not all, but I would also suggest you follow us on our social media pages. They are a wealth of knowledge, and they share information about upcoming webinars, about details that the organisation is providing, any reminders or any new news that we need to share. So if anyone has got any questions or any, inquiries at any point in time, reach out to us using one of those contact points. That's pretty much where I've going to finish up on the slides perspective. So I'm going to just check in with Mandy quickly to see how she's going with all of the questions online. Mandy, is there anything that we need to share or you need any help with? That's a no. That's great.
At the moment, I think I'm up to date with all of the questions. There are a lot. If you feel like reading out some questions and answers, you're welcome to.
Thank you. Is there any common themes that we should focus on?
Nope. Mostly just all of the questions you answered in the slide after they came through.
Okay. Like I
Someone
said
just had their
earlier.
hand up there. I don't know if you want to go there.
Where are we? Oh, Kishal, yes, you can answer your question.
Sorry, my question was related to salary sacrifice. So as an employer, we do provide employees with a salary packaging benefit, and that mostly goes out of their pre-tax salary, and that reduces their tax liability. So how SAPLSL will determine it's a pre-tax or post-tax salary sacrifice?
So the answer to that is if the worker or the employer put a salary sacrifice amount on the form, on the claim form, we will pay that amount to the employer, and then we will calculate the tax based on the remaining amount that's paid to the worker. There won't be any further processing about pre and post tax. So that will be the process for all salary sacrifice deductions.
Thank you for that. Thanks, Mandy. I know we get a lot of questions about salary sacrifice, so I'm pretty sure we have a information sheet on salary sacrifice on our website under the toolkits. What I might get Mandy to do is, if you can just chunk a link, I know I'm putting you on the spot, maybe just grab a link from of that information sheet from our website and just chuck it in the chat if you can.
Wait, which sheet?
The salary sacrifice
sheet. Yeah.
Yeah.
All right.
Yeah,
and maybe
just one. On that one further, my concern is if we have like a salary sacrifice, some employees has total lump sum amount with a salary sacrifice with a salary packaging, the novated leases as well. So that part has like kind of pre-tax and post-tax payments. So pre-tax and post-tax deductions. And that both has to be paid to the salary packaging provider. So that's why I'm asking questions. How authority will distinguish both part?
So we do understand that, but our legislation has specific rules in it that we're required to follow. And what our legislation says is we can deduct some of the money from the payment that's supposed to go to the worker and give it to the employer to manage salary sacrifice arrangements. That's it. That's all the advice that we have. So there can't be any variation from that because we have to follow what steps are in the legislation, and that's what the legislation says we will do. So whatever you put on the form as part of your salary sacrifice agreement, if you say $300 is going to the employer to manage salary sacrifice obligations, we're going to pay $300 to the employer from that payment to manage those salary sacrifice arrangements, and then the rest will go to the worker, and we will tax the amount that goes to the worker. And that is the process. And we can't deviate from that because that's not what the legislation says. The legislation has given us the rules of what it is we have to follow, and that's what's going to happen.
Thanks, Mandy. I think that's fairly clear. So let's just move on. Sorry, I was just getting you to put that link up for the salary sack. So if you can do that. Vanessa, I see you have your hand up. Hello.
Can I just confirm that you're only using one tax table? Is that the only tax table you're using?
It's the ATO weekly tax tables that we use based on the weekly rate of pay that we're paying to the workers. So that's what we use to calculate the tax, but also the termination payments and the cash out payments are taxed at the marginal rates.
Okay.
Thanks, Vanessa. Okie dokie. Sorry, I know I've put you on the spot, Mandy, with that link, so apologies for that.
Yeah. Fine. There's a question about what tax rate applies to the employee for help debts.
Yep.
That's the same thing we said before, is we can't take anything else into account with the additional tax or HECS debts or whatever it is. There is only the one rate that we can do.
Yep, excellent.
And I've shared your link now, Aaron.
Yeah, thank you. Appreciate you doing that. I can see James has got his hand up. You want to just jump on in, James?
Yeah, thanks. Just want to check around. So if I change employer, let's say I've been at my current place for 6.5 years. The scheme comes in. I've reached my 7 years here, or let's say I don't reach my 7 years with this employer, and then I move to a different employer. So when I do reach, so does my entitlement start date go to the 1st of October, or does it stay with what my start date would have been when my employer registered me with the scheme? which would be their start date.
If you leave, no, that's okay. If you leave your employer before you've accrued 84 months of service on your account, then the service accrued before 1st of October will not be recognised. So
all right,
when
so I have
in
to, have to
February,
start the 7 years again.
yeah, if you haven't reached the 7 years when you leave, so the 84
Yep.
months on your account. So in February, when we put all the information about pre-scheme service on the system, everything you accrued will be dumped onto your portable long service leave account. If at the time that you change employers, you do not have 84 months of service, then that pre-scheme service will go away.
All right, cool. All right, so then if I do reach the 7 years and then change employer,
the employer will continue to hold that liability for that pre-scheme service until you claim it.
So it's really important there, James, to understand.
I guess I'm not talking mostly about the dollar value of the accrued amount. It's about the start date calculation for entitlement of the 84 months.
Yep. So if you've got 80 months of service when the scheme starts, and then it comes over onto your portal, so you'll have 80 months of service. Yep. Then once you've had that extra 4 months, which will actually be 6 under our scheme, added to your account, that will lock in that that earlier 80 months of service.
Yeah. So if I don't make the 84 months with that employer, I lose the months as well. So then essentially I'll go back to only having 4 months.
Yes, that's right. The time in the sector only counts if you reached a long service leave entitlement.
Cool.
Yeah.
Thank you.
You're welcome, James. Thank you for that. I just see this question about a bulk upload spreadsheet for employers to lodge the current standing leave entitlement. So that sounds like to me that special one-off claim that we'll do next year for pre-scheme entitlement. I assume that there will be a bulk upload available on the portal, and that should pre-populate with all their registered workers, I would expect. Is that right, Mandy?
Yes.
Yeah,
yes,
excellent.
It is.
So that would help that bulk upload document, so it'll be available to download with the pre-populated registered workers on it. If there's any new workers you need to add that were missed, you can do so as well, and then that'll be that once-off return for notifying us of the pre-scheme long service leave accruals for each of your workers.
There's another question, now that staff have been registered, will they be contacted? So yes, when we process the worker registration forms that we receive from the employers, part of that process involves creating an account for the worker if there wasn't one already. And then we do send the worker an email inviting them to access their portal. One of the important things to remember is that because we haven't got all the backdated data yet and the first quarter hasn't finished yet, when the workers do access their portals, they'll essentially be empty, and that's expected. So if you are communicating out to workers about their accounts, we are expecting it to be empty at the moment because nothing's been reported yet. So this is perfectly normal and no one needs to panic. That's what's supposed to happen. Early next year, as we start getting the data through on the return forms, that information will start being populated across the worker accounts, and then they'll start to see their accruals appear.
That's a fairly important bit of information that Mandy just shared, that the portal for each of their workers will be, won't show their pre-scheme balances as yet, and that's why we'll do that once-off return in the early parts of next year to capture all that. And once we've got all that, we'll be able to update all of everyone's worker portal information, and they'll be able to see their full balances at that point in time. So
as another question about interstate service. So there are provisions in the Portable Long Service Leave Act that allow for service to be recognised interstate, but for that to happen, there needs to be an agreement between all of the different long service leave authorities across Australia in community services sector of how we're going to recognise that service. So that is an intention that will happen. It does happen in the construction industry already, but because community service is quite new in most of the states, there hasn't been that agreement established yet. Once that agreement has been established, then yes, service from interstate and community services will be recognised as well as service in South Australia. At the moment, it doesn't. There's another question, what does 84 months of service actually mean if someone only works 5 hours a week? So the way that the Portable Long Service Leave legislation works is that if a worker works for 1 or more days in the quarter, which is 1 day is 2 hours. So effectively, if you work 1 shift or get paid for one shift of 2 hours in the quarter, then the worker will accrue 3 months of service on their account. So the 3 months of service is the time that they've spent working in the community services sector. 84 months means that they've been working in the community services sector for 7 years altogether. Where the hours per week comes into it is when we pay the workers for their long service leave. The amount of work that they've done in each week will be how their weekly rate of pay is determined. So if the person doesn't work very many hours a week, then yep, they'll get 13 weeks of leave, but it might only be at 10 hours a week if that's what they normally have worked over the time. So they still get the 3 months of service as a time situation, but the amount that they work will impact on what their weekly rate of pay is at time of claim. Staff are struggling to register or activate the link. This is very much a known issue. The authenticator method is about keeping the account secure. Obviously, because we're paying people money, we want to make sure that we're paying the right people, and security is very important to us. That said, we do understand that it's not always that easy to get that QR code up on a computer so that you can scan it with your authenticator on your phone the first time that you log in. We're really sorry, we know that's difficult, but again, it's just about security and making sure that people are not fraudulently claiming long service leave entitlements.
And just a quick one on that, if the link has expired, just send us a quick email or give us a quick phone call and we'll be able to reissue a new link.
That's right. There's also a multi-factor authentication guide that is available on our website too, which might help people to understand how they need to log into the system. Yeah, it might not as well, but our staff are getting quite a lot of calls about this, so they're quite good at talking people through and trying to help them access their accounts the first time. Yeah.
So I've just chucked that multi-factor authenticator guide into the chat for anyone that needs it.
Thanks, Aaron.
That's all right.
If your staff haven't received a link yet, it could be potentially because we haven't processed the worker registration form. It could also be in their junk mail. Sometimes that happens is they just go directly to the junk mail, so definitely recommend they go there. But if you know that staff have an account created for them already and they haven't received a link, you can just contact us and we'll be able to resend them. What else have we got here? What happens if we've done a bulk worker registration, they've received an email, so the worker has gone on to re-register themselves. So yes, when we receive a worker registration form from either an employer or a worker, part of that process of processing that form is that we review whether or not that worker already exists in our system. If it does, then we don't create another account, we just keep the existing account. If there's no account already, then we do create another account, a fresh account, so that that person will have one. What
and
do
let me
you
just
do?
Oh, you go, Mandy.
No, no, you go.
I was going to say this is a mandatory scheme, so it doesn't matter if staff or employers do not want to register them. It's actually law, and it is required for all eligible workers that are working in the community services sector to be registered and their long service leave to be managed by the scheme. So it's really important to understand the Act has put this into law, and it is something that is mandatory and required to be undertaken.
Yeah. Where else are we at?
Do you want to just answer the question around how long an organisation retains the liability?
Yes.
You know, for a worker?
Yes. So if an employer holds a liability for a worker, which means that if the worker has reached 7 years of service with that employer, including service accrued before the scheme starts, the employer continues to hold that liability until it is being paid to the worker through SA Portable Long Service Leave or directly through the employer under the extinguished liability provisions. If the worker reached their entitlement before the scheme started, then that liability is a fixed dollar amount as at 30 September. So you would work out what the worker is owed for long service leave at 30 September, and that would be the fixed liability. if the worker reaches 7 years of service with that employer after the scheme starts, so that was the 84 months that we were talking about earlier with that example, the employer's liability is held based on the weeks of leave. The amount to be calculated is based on what the worker is paid at the time of claim. So if the worker reaches the liability, but the worker reaches an entitlement but doesn't claim until a couple of years later, then the rate of pay at that time upon claim is when they calculate what that liability is. If the person leaves the employer before they make the claim, you just work out what the rate of pay would have been at the time the person left the employer, and then you can calculate a static liability. I know that was a lot of words. It is written down somewhere. I'll make sure it's on the website as well. What do you do if the worker won't sign the extinguished liability form? You don't extinguish the liability. It has to be an agreement between the employer and the worker. The employer or worker cannot force the other to do it. It has to be an agreement between both parties. Okay, if the worker doesn't want to extinguish the liability, then you need to hold that liability until it's been paid to the worker. And vice versa, if the employer doesn't want to extinguish the liability, the worker can't force them to do so either. Where employees performing mixed duties where only part of their role falls under a covered award, which threshold determines inclusion in the scheme. If you have a worker that you're employing under the SHADS award, but their work includes multiple different things, you need to report them, and you need to report for all of the work that they do because they're covered under the SHADS award. If they have a dual contract where they have one contract that is SHADS and one contract that is something else like aged care or whatever, because they're separate contracts, it's essentially like you've employed two different people, even though it's the same person. So you would only need to report the service that was accrued under the SHADS contract. There's no test on how much time they have to spend doing SHADS work. If you are if they are covered under SHADS in their role, then you do need to report for all of their service, regardless of how much of their time there is.
There was a question in there, if you just take a breath for a minute, Mandy, there was a question in there around if the worker registers after the employer had registered them registered them. So there is a duplication. So our team here, our registrations team, will pick up on that duplication and they'll try and work out what's happened in that space and make a few phone calls and try and determine exactly what's happened. What the likely outcome could be is
the accounts are merged together, so they
yeah, that's right. They are merged, but one of them might, we'll be sorting that out. So yes, is the answer to that question, that we will be sorting out duplications.
So there's a question about refusing workers to take leave. So long service leave needs to be an agreement between the employer and the worker. The employer can refuse for the worker to take long service leave if it's not a convenient time, but there does need to be a business reason. So the Long Service Leave Act requires employers to approve the leave, provided that that works for the business. So if there's a business reason why the worker can't take the leave at the time, then absolutely they have the right to refuse it, and portable long service leave won't pay a worker for long service leave if the employer hasn't agreed to it. But the Act does require the employer to agree to it unless there's a good reason not to. If an employee has multiple employers simultaneously, do they get registered with each employer? Yes, they do. They will still only accrue 3 months of service for each quarter, but the rate of pay that they get will vary because it will include different work with different employers at the same time. So their weekly rate of pay for portable long service leave purposes will be across all of their employers in the sector across a week. Where am I up to? What do I mean by extinguish the liability? We do get quite a lot of questions about what extinguishing liability means, so I might just take a couple of minutes to talk about that. So under the Portable Long Service Leave Act, there is a provision that allows an employer to pay a worker directly to extinguish the liability that they hold for long service leave accrued before the scheme starts under the Long Service Leave Act. So effectively that means that if the employer is required to pay long service leave to the worker, or the worker is accrued long service leave with the employer before the scheme starts, then they do hold liability. And if their worker and the employer want to agree that they just pay it directly and it's marked as taken on their portable long service leave account, that's allowed. Employers may not pay workers directly for service accrued after the 1st of October. So if you are extinguishing the liability, essentially you're just paying out the service that was accrued before the scheme started, and that's kind of the end of it.
There's a question on there around the form. Can the form be developed to have employee ID field to help, I guess, or the team to be able to identify the employee? So there is a box on there about the worker reference number, and each worker will have a unique reference number. So that could be
yeah, you will be able to see that worker reference number in your portal. So after you've registered your workers, there is like a screen where you can see all the workers that you have registered, and it will show their worker IDs. But yes, we can look at putting in a employee ID field on the form as well. I'll add that to my to-do list right now and have a look at how that might work out.
So what's important in that space is that the portal will generate a worker reference number, but if the employer has their own worker ID number, we can also incorporate that to make it easier for the employer to identify the worker using their own number, if that makes sense, which is also included on the returns form and all the other downloadable documents that you'll use.
Yep.
I know that we're getting a fair bit of questions around eligibility, which I know today is not necessarily the space for eligibility. So we do have a ton of information on our website about it. When we talk about eligibility when it comes to businesses operating in the community services sector, but workers are on a non-award, so they're not covered necessarily by an award at all, Mandy. Are we taking the stance that as long as that's, I guess, following the same provisions of what the SHADS or the ALRM would normally be in place?
Not exactly, Aaron. So workers who are not covered by the SHADS award, but are working in a business where their role is to support the provision of community services, and they spend more than half of their time doing that, then they are required to be registered. So what we mean by supporting the provision of community services is that that person is doing a job that enables someone else who's covered by SHADS to deliver a community service. So that kind of thing is people doing your payroll or your admin, someone who's scheduling appointments for you to visit a client or for a SHADS worker to visit a client. And that can continue at multiple levels of management. If the entire business consists of people who are providing community services and covered by the SHADS award, then all of the admin people and management that sit behind those people and enable that service to be delivered are also eligible. The only people who don't have to be registered in that space is if they spend less than half of their time supporting the provision of community services. So the example that we've been using is if you are a person doing payroll, for example, and the business that you're doing payroll for is 60% aged care and 40% community services under SHADS, then that payroll person, if they're splitting their time across the entire business, would not be required to be registered because less than 50% of their time would be spent supporting the people who are under the SHADS award and delivering the community service, because most of their time, that 60% was aged care. That's how the 50% rule works. If the employers want to register workers who are spending less than 50% of their time supporting the provision of community services, they can. There is voluntary registration allowed for those people. However, once the worker has been registered in that role voluntarily, the employer will need to continue to register them and report for them for the duration of the time they're in their role. So basically, if you decide you're going to put everyone in because that's easier, or you're going to put some people in because that's easier, that's fine, but you need to continue to put them in. You don't get to change your mind later and go, nah, we don't want to do that anymore.
Okay, thank you for that. Can I just suggest that if anyone has any specific examples to their own organisation around any of the comments or any of the subjects that we've been talking about, salary sacrifice included, and if you've got a specific example that you want to talk to us about, please give us a call or send us an email. I'm more than happy to work through all of that with you. I know we get a lot of questions about salary sac in particular. and there's a lot of information that we can provide. I don't think we've got too much time left to be able to answer all the questions in that space, but I know that it's really important to recognise that salary sacrifice portion on that form that we went through before. It's very clear around the amount that you tell us, how much it has to be paid back to the employer and where it has to go to. So, for example, I think there was a question in the field somewhere around when an employee reaches a threshold. So we would expect that if there's an example like that and there's no more salary sacrifice to be paid, that section would be a 0. So I think we're really reliant on what information you're providing us, and we will action exactly what you tell us.
I do want to address that last question that's come through. What happens to the tax if the company pays out a termination, employable long service leave pays out the long service leave separately? So the company can't pay out the termination in full. The company can only extinguish the liability that they hold for service accrued up to 30th of September. So that would be the extinguished liability provisions, in which case you manage that yourselves and you need to report to us on the form that's available on our website to say that you've extinguished the liability that you held with that worker. If the worker then comes to us and wants to make a claim for a payment, if it's a termination payment, we'll tax it like a termination payment under the marginal rates. If it is a long service leave claim because they still have long service leave on their account, then we'll tax it that way. I hope that answers that question.
Excellent. All right. Oh, it does. We've got a thumbs up on that one. That was good. Excellent.
Yay.
All right. I know we've only got a couple of minutes left. So was there anything else that we wanted to close out with, Mandy, that we want to address, or are we pretty much there?
I think we've answered most of the questions. Like we said before, there are a lot of detailed questions about salary sacrifice. Please email them through and we'll be able to answer them specifically. But like I said before, the provisions around salary sacrifice in our legislation are quite simple and we don't have a lot of options about how to make it work. So what we said will happen is the employer gets some of the money, the worker gets some of the money. That's all that's available and that's what we'll be able to do. So keep that in mind when you're asking your questions, that the answer you might get back is just, this is what there is. We can't give you any more than this because this is all that we have. Okay.
And that's a really good point to make, is that we are guided by what the legislation tells us and what it tells us to do. We don't go out and just make our own rules up. We have to follow those instructions and those directions to the T. I guess the key point there is that we're here to administer what the legislation says. So if it tells us to do something, that's the way we have to go about doing it. If it tells us that we have to do it this way, that's the way we have to go about doing it. So we are guided by the legislation to the T. So if there's some confusion or uncertainty, or if you don't agree with it, unfortunately, we can't do anything about that. So it's really important for you to understand that we deliver the services as stated in the legislation. I know we have got less than a minute to go. I just want to bring you back to the slide on your screen. If you do have questions around salary sacrifice, if you have questions around eligibility, jump on our website. There is, I've been told there's so much there that it's actually really good, which is excellent. That's what we want to hear. So it's fairly easy to navigate. There is information on there around previous webinars and all of those toolkit informations. If there's something there that you can't find an answer for, email us, ring us up on those numbers on your screen now. We've got a team ready and willing to take all your questions and are really wanting to help you guys guide through this process. And we know it can be tricky, something new like this, and you might be just learning about this for the first time in the last couple of weeks. So don't worry, we're here to help you. And we just want to make sure that you know that if you need us, you need our help, you can email us, you can visit our website, or you can call us. I will put this recording up as soon as I can, and I'm getting better at it every time I do it. So generally I can get it up by the end of today. I'm not going to promise that because sometimes IT doesn't always help me very well, but I'll aim to have the recording of today's webinar on our website by the end of today. Hopefully that answers your question, Karen. I'm going to leave it at that. I'm going to close out. Thank you so much for your time. It's been really good to hear all your questions, and it's been really helpful to be able to explain this to quite a big number of people. So thank you so much. Please join us for future webinars and reach out if you need any help. Thanks very much, everyone.